for oil as well. Prices are down to about $65 a barrel after falling last week on a stronger greenback, while Brent crude has fallen to the lowest level in nearly a month. Joining me right now to talk more about that is Schork Report publisher Stephen Schork. Stephen, good to see you. Thanks so much for joining us.
It's great to be here, Maria. Thank you.
You know, we've got to look at you in all your gear. Congratulations.
Absolutely.
You had a good
Thank you
game
very
last
much.
night. Good performance.
It was one of the best games of my life. It was fantastic.
Nice gear this morning. Thank you for that. What are you watching in oil?
Sure. Right now, Maria, we're essentially pushing up against the top right now. We've had a heck of a run over the last several months, but there's clear indications that we are starting to peter out here. From the production side, we know production is through the charts, and production is going to remain strong for two main reasons. The hedges. The producer had been a very large hedger over the summer and into the fall, but what we're seeing now is the swap dealer, i.e. the guy that took the other side of those hedges from the producer. They've now set 14 consecutive records on being short the market, so they're now covering all those hedges they sold the producer. So there's a lot of production sold forward, and we're starting to see it. In fact, we broke 10 million barrels a day for the first time since November 1970, last November. There's also a very strong correlation between WTI prices and the 4-month lag in oil rig counts. So the 4-month rally we've had in WTI, we know over the next 4 months, oil rigs, and therefore production is going to continue to rise at this point.
You know,
also, we're now in the winter turnaround season.
One of the things we talked about earlier, we talked about, Stephen, the stock market selling off, you know, but obviously it's run up so much. And when the argument there is that things are so good that it becomes bad for stocks and people, as you know, worried about inflation and what have you. But a strong economy, which appears to be what we have, would kind of be a good thing normally, right, for oil prices. It would support the oil price, and maybe that's not the case this time. Is that what you're saying?
No. It's absolutely great. It's a good thing. And this was the idiocy that was being promoted 2 years ago when oil prices crashed and all commodity prices crashed, that somehow sub-$2 gasoline was good for the U.S. Consumer. That's baloney. U.S. Prices do not drive demand. Good economic demand drives commodity prices.
Yeah,
so if you've got strong commodity prices, you have a strong economy, and that's a good thing.
And that's what we've been seeing, obviously. Stephen, always a pleasure to get your insights. Thank you so much. Stephen Schork joining us there. One view from the oil at the top. I sat down with the CEO and chairman of Marathon Petroleum, Gary Heminger. Here's his take on where things stand.
If you look at, first of all, on the oil side, then I'll get into gasoline and diesel.
Good.
But on the oil side, we're expecting in 2018 global demand to be up about 1.5 million barrels per day. And if you look at inventories on across the globe for crude, we're in the best shape, and I would expect by mid-year we'll be in balance across the globe on the crude oil side. On the gasoline, inventories are the lowest that they've been since 2006.
Wow, I didn't realize that.
So if I go back to 2015, 2016, as we came out of the third quarter of the driving season, inventories really swelled in those 2 years. This year, we're entering 2018 with the lowest gasoline inventories since 2006, and diesel is the lowest inventory since 2013. And we're seeing a big boost in diesel demand across the country.
Let's talk about diesel, because you say diesel is a really important indicator in terms of what's happening broadly in the economy.
It is, Maria. For many